if you've came off of a floor trade narrative, if you've ever been working on a floor, if you stand around watching everybody else doing business, and then when everybody's done business, you start stepping in, you're probably not going to be very successful. Probably going to lose money, in fact. And the reason for that is everybody's already taken the best prices. If everybody's already taken the best prices, all you can hope for is a bit of momentum, right? So the ability to make fast decisions, the ability to make absolute crystal clear decisions, no procrastination, no indecision, that ability marks a great trader from everybody else. You've got to think to yourself about whether when you make the decision that you just say, right, that's the deal, get me in, that's what I want. I just saw a big buyer at a big buyer on bonds, for example, at 162s. It was a big block trade kicked off at 30, 31, 30 at zeros, and I simply went against that buyer, and I made my decision. I took my trade, took my shot, got involved, and made some quick money. I tweeted it out for you guys to see it. We already knew we were on offer watch, so obviously what I'm now looking for is an opportunity to do the trade. There it is. This is what I ended up doing. So we've seen this big buyer at 50 contracts. You can see there's nowhere near 50 contracts on the way up. 50 contracts strikes into the zeros. It's obviously the zeros, which means we've just went up by $2,000. And I smacked in some sell orders against that lean. Smacked in some sell orders. You can see there's a little bit of a book divergence into that. The price then sold away from the price. Instant, decisive price action. Instant, decisive action. No thinking about it. I've already done my thinking. Well, this 5-second chart on the NASDAQ really gets you thinking about fast moves. Really gets you thinking about fast value. Really starts building your confidence. This is why it's an exercise, not a trade. That's why it's an exercise. Because this exercise allows you to start practicing adding and subtracting liquidities. Now, whether you do it, as I said, on the S&P or whether you do it on the NASDAQ or not, that's up to you. I don't really care which market you trade, because it's a demo anyway, or at least it should be a demo when you're practicing this, because this is fast and this is furious, and it's about getting trades on, getting stops into break-evens, getting plus ones, getting a little bit of money very, very, very quickly. You're going to make somewhere in excess of 10 decisions, potentially 10 decisions every minute, potentially. Literally could be 10 decisions. Probably it's going to be more likely to be 2 or 3 decisions every minute. Still got to be fast to do it though. So what kind of decision are we looking for? Well, this is a perfect example of a decision right here. Blue line going up, red line going down, purple line going down. Now what are the red and the purple lines? Tick, Q, and tick. Tick, Q, and tick. Going down. I put the ICOT score onto this chart, so it's just the little purple dots. You can see it's also got the red line in the opposite direction. So what should happen is that the light red line should be in the opposite direction to the red and purple lines, and the blue line rising. That's your trade signal. In that situation there, you start adding bids to the low of the price. That's it. You start adding bids to the low of the price. If you add bids to the low of the price at that stage, you would get filled on that buy trade right there. And that's the deal you want. That's the trade you want. And look at what happened to that buy trade, guys. That's the perfect example of the perfect trade. Why is it perfect? Well, one of the things that we talk about, I remember Cliff was talking about it as well, is that ICOT. And you don't need to use ICOT, guys. We've got volume, right? So we don't need ICOT. It's just to show you something else. If the ICOT goes above 70s, and in this case ICOT was 75, usually that is a strong example of an extended move. And with the value turning back up, that extended move is going to get a lot of profit takers. And then we get this buy reversal right there. Perfect. Fast money move. So if that's the perfect example, what do you do with that? Well, what I would suggest you do with it is you take a screenshot. Put it on a chart, put it on a paint box, put it on whatever it is you've got access to. But take a screenshot and look for other examples of exactly that trade. So there it is. There's your screenshot. And what you're looking for is exact examples, exact replicas to now mirror what the institutional buyer just did there, what the big market maker just did there, because this is not a human being. Remember I said this yesterday, this is not a human being, this is an algorithm that now does this all the time. This is a 99% algorithmic now. So when that trade sets up again, you can almost guarantee that the same outcome will set up again, not the same amount of profits, but the same bids coming into the markets, allowing you to make a good decision about a buy opportunity there. So you start watching. Now, you've obviously got some value in this chart as well here. You've got the green line, which is the XLK, XLUs, and you've got the blue line here, which is actually Dow Jones Transports. It's always best if we can put at least the green line in our favor. So that's a little bit of a background reference to keep you right on this trade, and you can see that the green line on the trade was actually diverging when you put the bid in on a macro scale and a micro scale. You can see the green line had been diverging at that stage and that'll drop lower. So this is the perfect trade. If the blue line's confusing, take it off. Definitely have the green line on because that's XLK, XLU. Okay? And now you go forward. And you start looking for perfect trades. Now, this could have been a great sell trade. You can see the red line goes higher. The purple line goes higher. The blue line drops. We get a surge in volume. And this drops down to about 50. It's not quite in the 70s. It drops to 50. But obviously you can see that the Dow Jones Transports are very, very bearish just now. It's into a very, very interesting key level. There is no sell on the XLK, XLU. So is it perfect? No. Is it good? Ish. It might have been good enough to take a pop at it as a trial, as a tester to try and understand a little bit. But obviously you'd have wanted to make sure that was not a bullish green move. You don't want to be buying into or selling into this if it's going against you. So it's ishy. It's a little bit of issue, isn't it? It's not brilliant. It's not good. It's okay. It's acceptable. So if this was, for example, a 10-lot trade, this would maybe be a 3-lot trade. That type of idea. Yeah. Moving forward, you're going on with this narrative. And obviously when we start to see this climbing up into the 70s here, you're starting to think the move's overextended and you start watching for possible turns. There's a possible turn right there. The green line's driving down, the blue line's driving down. I am not interested in adding liquidity. Not a chance. There's no reason to add liquidity in that trade. And the price carries on going. And that's all we're looking for, isn't it? We start seeing the price extending. We see volume coming into the markets. We start asking a new question. Am I buying this one? Well, green line's driving down, blue line's driving down. The answer is no, not buying that one either. Okay, so we move on. We move on. Now we're starting to see something interesting here. The green line's diverging. The blue line's rallying, but starting to drop off. The red line is spiking aggressively high, aggressively higher. That's good news. That's the NASDAQ tick that's going higher. The S&P tick is actually not going higher, so that tells me that the trade is definitely on the NASDAQ here. So when I see that blue line divergence against the red line here, and the red line here is going down, I don't have a volume spike, and the reason why I don't have a volume spike, of course, is because the big volume is going to be above that price, which doesn't trade. So if I'm going to add liquidity, I'm going to add liquidity into this uptick. But I'm going to be quite soft in the adding of liquidity because obviously we know that we're going to have to add liquidity in and through this level here. But that is definitely a market maker sell trade right there. Definitely. And obviously the sell, well, it does okay. Make some money. Make some money. Now this one's a little bit more interesting, isn't it? Because we're starting to see some real money volumes coming in on the value divergence back into exactly the same price. Now remember one thing I told you about yesterday. When you've marked a price, make sure you keep this price valid on your screens for a little bit of time. If the dealers are adding liquidity at this price, they'll probably stay adding that liquidity there for at least the next few minutes. And that gives us a few clues about the probability of coming back in again at exactly the same price print. And we start drawing in our added real-time liquidity levels there to try and find that opportunity. And obviously that sell, well, it did okay. And guess what happened again? We came back into exactly the same level. Now what I am seeing is I'm seeing transports, for example, going bullish in the background here, but I'm still seeing tech stocks getting sold against utilities. I see a downtick just here. I don't see an uptick, but obviously this price does get tested, so I don't know what happened in this retest here. but that might have been an opportunity to sell into. It's getting poor though, isn't it? Because of the rally in transports, it's starting to get poor. But obviously what happens is we get a very, very, very nice sell away from this. You see the tech stock still in line with that trade there. If I get rid of the transports on that move, you'll see that we're still in line with the tech. It has to be in line with the tech. So selling into that key liquidity level has resulted in a very, very nice profit to the downside at that stage, right? So this is the point, isn't it? This is the point. Now, did we get a buy reversal in here? Well, the blue line started to go up. The pink line is now into the 70s. Okay, so we've now got that condition of profit taking probably coming into the markets. And obviously with the green line turning up here and the red line driving down here, I quite like the idea of adding bids into the market during that period there. Now obviously the price does pin down into that area, and you'd have been able to get filled at least on that trade, but I quite like that trade there. I don't like it on the way down because obviously the green line was driving down, but I like the buy trade coming in there. Now what does that mean? Well, that means we should not lose sight of this area. Now, if the value drops, it doesn't matter. We just pass on the trade. But we're now aware that this could be a level to pay attention to. And obviously what happens is the price keeps dropping down into that area and the value keeps dropping down into that area. So there's no real trade opportunities for us to do any business there. Okay? No trade opportunities. What happens next? Well, we get a sell program kicked off here. The blue line drove lower, massive spike in volumes. A big sell-off on the tech stocks utilities, so that's not going to be a trade for me at any time soon. And then we started to see something really interesting taking place here. Tech utilities are going up. That's nice. So with tech utilities starting to go up, I'm watching for the blue line turning. The blue line turns up. Now I'm needing a downtick, okay? So obviously, again, I can't tell what happened because obviously this is a green candle, so I can't tell what happened when this green candle printed lower, but I can almost guarantee that when the price printed lower, the green line was still divergent, and therefore there would have been a probable trade. I can't be 100% sure, but there would have been a probable trade by adding some liquidity at those lower candle prices, and obviously that would have been a buy trade, and you can see that that buy trade was spectacularly good. There's a good example of a sell trade, a benchmark sell. Does everybody see this one? This is a great example of a benchmark sell. This is almost a perfect mirror of the buy trade that we had in the background here. The benchmark sell comes in with the blue line driving down through this face, yeah? You can see a big spike in volumes. We see that the ICOT's down into the 60s, not quite as low as we'd like it. We always want it 70 or better. You can see eventually it trades 68. The volume's still coming in, the blue line's divergent, and the green line's divergent off the highs. I really like this as a added sell side offer. Really like it. That's almost good enough to be a benchmark trade. The only reason it's not good enough to be a benchmark is because the blue line in the macro was selling, but in the short term was rising. So it's a good trade, but it's not a great trade. And obviously at that stage, it just drops off, not by much, but it drops off enough to at least get some profits as a market maker and a stop at break even. Okay, so let's carry on and let's see if we spot any absolute screamers. Well, there's a very nice looking trade here. Unfortunately, it's on a red candle, so again, you would be relying on an upticking price to get into that sell trade. There's a bit of value in here for a possible buy, and guess what happens? Blue line goes up, red line goes down, puff of volume, the ICOT goes up to 60s and 70s, and that is going to be a definite buy opportunity into that candle phase there. It's also a prior swing low. So that's where you would be adding liquidity, yes. That's where you'd be adding liquidity, and sure enough, what a buy trade. That's absolutely perfect, yes. Absolutely perfect. Now obviously we're getting very close to the right hand edge. We'll get there eventually, but the best thing you can do with these examples, guys, is go through them. You might say, why don't you just start at the right hand edge? Because you need to put yourself into the frame. You need to put yourself into the trades. You need to put yourself into the marketplace before you start going live. You need to do this. It should be in any market, in any time frame. You should always look at the last few trades. Why? Because you need to know what everybody's got. It's the same as a poker match. If you can see what everybody's hand is, It makes your trades a lot easier, right? So that's why you always go backwards before you go forwards. I don't know if anybody does that, but you should. Absolutely do that. Now, as a flow trader, you can't do that because you don't know when anything happens. You start your day at zero, right? But it's always best to see a few trades going off to get a feel for who's doing what and where, right? You don't just jump in. You let a few people kick off the business end, see how the market's feeling, get a feel for the pace, get a feel for the narratives, get a feel for the volumes, and then step in. Okay, so let's catch up. I'm just watching value. That's all I'm looking for, guys. If I see value coming in or out, I'm going to be starting to look for a trade. So we're now on the right-hand edge of the charts. What trade would you be wanting to do just now, guys? What's the best looking trade? It's got to be a buy trade, right? It's got to be a buy trade. So if I find any blue line rising and red line falling, then I can start looking at a possible buy trade, right? Now, where is that buy trade likely to come in? Well, we know where the key levels are. So we're obviously thinking about the possibility of a buy trade coming in on these downticks. We see that there was a bit of a spike lower here, but it never brought in any volumes. Remember this pink line, we want to see that pink line driving higher into the 70s, and that's exactly what it's just done there. We want to see the blue line starting to turn up, and then we want to start bidding into those low liquidities. I've just done it, and I've just made a nice profit there, guys. Anybody else see it? That was a live trade. I've just made a very nice profit. I've taken a trade, and I've got in at the S&P. I got in at 42.08s, and it's just traded 42.11s. 42.11s. Did you see it? Does everybody see that as a brilliant trade? Now, it wasn't on the way down. It actually was on the way up, but it did downtick into that price. See how fast I had to be there, guys, to get the deal? I had to be lightning fast to get that bit of business. But we'd already prepared for that trade because we knew where the stops were. And if we know where the stops are, we know that that's going to bring the spike in volumes at that price. So that's why we were saying that this is the best way to practice this, because you're obviously trying to get ahead of what the move is going to be. It's the only way you'll survive, Stuart. It literally is the only way you'll survive. Anybody that's ever traded the floor, like myself, or anybody else that's ever traded the floor, will tell you you've got to start preempting where the volume's going to come in. And the way you do that is simply to look in the background to find where the liquidity is. Now, obviously, I'm not trying to buy any of this at the moment. The value is very bearish, so I'm not trying to buy any. That's why I'm just talking just now. And obviously, with the value very bearish, I'm quite happy to be on the sidelines watching the price drop through. We can zoom out at this stage to try and get context to this. And obviously, by doing that, we can start to look in the background to see where the big lows are and the big highs are. You can see the value is still lower than it was here, so I'm still not looking to buy into this. And I'm happy to be off the market just now after that perfect example of a quick execution buy trade. I'm waiting for the next opportunity, right? Waiting for the next opportunity. What's it going to be? I have absolutely no idea. The value is bearish at the moment, so I'm certainly not interested in buying it yet. I'm simply not interested in buying it yet. I'm happy to be on the sidelines watching. Let's take a look at something else here. Dow Transports. We can see that Dow Transports were very bullish through this period. They started to become very bearish in here. This is this idea of making sure that you keep track of perhaps a few other elements in these types of trades. But if you're on a 5-second chart, guys, you're going to take a while to get up to speed by looking at several of these stories, okay? So it's best to get rid of a few of them to try and just stick around with these trades as long as you possibly can in these areas here. This can be zoomed right in. And when you zoom it right in, you can start to see the big values. Well, I can see a big value trade setting up there, actually. Whilst I've been talking, I can see a big value trade setting up there. The blue line's gone straight off the bottom edges. You can see that we get a puff of volume here. The ICOT's gone up into the 70s. This could have been a very nice opportunity to buy some S&P in here. If we look at the S&P at that price, the value line was still dropping, so they've been very difficult to pick up a buy. But when the value line turns, you could have started to add in some bids. Well, you can see that you would have got filled on this down candle here. You got filled in that down candle just there, yeah? That would have been your possible trade. And obviously the takeaway from that's been reasonable. I never took the trade because I was talking at the time, so I never got the chance to take the trade on, but I would have taken it if I hadn't been babbling away in the background at that stage, okay? So the value is starting to build as a buyer, right? The value is starting to build as a buyer now. I've just seen 100 lot getting lent against on the S&P there at 94.75, 95s, and I've just lent against it myself. I've taken a buy trade, and I've got to stop in at break even, guys. Now, I was a little bit slow there because obviously, again, I was talking, and I just saw it literally when I flashed on the screens there, and we took a late buy into that, but it was a lean at 95s on the S&P. It traded a high print eventually there of 98.5. It came back down to 96 quarters. And you can see, obviously, I was just buying into that little level there. I just bought into that little level there on the S&P, not the Qs, but on the S&P. With value going up, with the blue line going up, the red line going down, no volumes, but still a great buyable opportunity just there. And you can see we've had a very, very nice buy response to that. You like that? You like that trade, guys? Is that a nice looking trade? I think so. Well, tell my friend you did, though. Transports had started to go bullish as well. Tech utilities had started to go bullish. So I quite like the opportunity to bid those lows. And a very, very nice market maker pop to the upside. Very nice. Nice, easy money. And we'll get ready to go again. Practice, isn't it? At the end of the day, that's all it is practice. You might say, my God, my head's bursting with this. It's too fast. It's too fast. Well, guys, you've got to get fast. You've got to get fast. You've got to get decisive. You've got to be willing to get involved. There's no ifs, no buts. There's no compromise ideas. If you're not willing to get fast and decisive, you will never be a successful trader. Some of the best traders on the planet have made mention of this several times. They've said that the mark of a great trader is knowing that the trade is setting up and executing. The difference between those two trades, the time difference between those two elements, is when the trade is ready to go and then you press the button. That's the mark of a trader. If you know the trade's ready to go and you don't press the button, there's a problem, isn't there? There's a problem in the way you're either interpreting it. There's a problem in the way you're dealing it. There's a problem in the way you're seeing it. There's just a problem. And you've got to try and fix that problem. That's why we practice on these very, very low time frames to try and become that decisive trader that you've always wanted to be in these areas against the perfect leans when they set up. You don't think about it. You don't talk about it. You just do it. You get involved and you hammer it hard. I've just taken a buy trade on the S&P and I'm taking some monies. I got a buy lean against the 93 quarters, so I took a 93 half buy. It's just traded 96 halves, and I am taking some monies. Okay, so we just got a retested low there. I decided to fly into that one on an S&P trade. I seen a big spike higher on the blue line, so as soon as the price came back down to retest, I started to buy up my S&P trades in this area here. And my goodness, have we had a brilliant response? Damn right we've had a brilliant response. I even put it in Ninja Trader specially for you guys. There it is right there. See it? Even put it in Ninja Trader right there. Look at that, guys. 3 contracts, $900 profit. $900 profit, guys, on a 3 lot. You couldn't make it up, could you? Boom. What a winner. What a chicken dinner right there, guys. What a chicken dinner. But again, fast, furious, brutal at times. We can see that we're running out of room. Happy to book into this move higher here just now and get ready for the next opportunity. We can see that the value is very bullish. If the XLK XLU is got a value in the background, we can see that this S&P could trade, or the NASDAQ could trade another 50 odd points to the background here. Could get a very, very nice buy side pop through this phase. So I'm not too inclined to close out my position. I'm just booking some profits. And obviously we've had a brilliant rip higher. That is absolutely spectacular, isn't it? Transport's getting a little bit weaker, so I am aware of that. I'm not going to hang around too long on these upside swings. I'm happy to book some of these trades. You can see the Prem starting to jam into the higher prices and drive off. That's something that I'm aware of. And obviously another retest and a divergence in the green. I might start even thinking about flipping this into a sell trade. So I'm watching to see if that happens. Watching to see if that happens. Watching to see if that happens. Still not seeing it. But I am aware now that we've got a key level above us. That's obviously something I'm going to be now paying attention to. I know that the green line suggests we should be a lot higher still, so I'm not madly keen to sell too soon. I just want to make sure that when I sell it, I'm just seeing a spike in the blue line. That's not what I'm needing. I need to see the blue line dropping, and it's not. So that looks like a little buy program's kicked off here. Happy to let it go through, and I'll wait for a better opportunity to set up, guys. A better opportunity to set up. NASDAQ looks a little bit better on the bid. The S&P looks a little bit better on the offer just now. So that's what I'm going to be watching. Purple over red, of course, is S&P over NASDAQ. So the sell at the moment is on the S&P, but I'm still not seeing the trade that I want. Another retested high might be an opportunity. Transport's really getting pressed here. So I quite like the sell on the uptick just now. I quite like the idea of selling uptick phases. And I'm just crossing a few spreads here, Mike. I'm crossing a few spreads here to do a bit of business. Don't like crossing spreads, but hey, it's not my kind of game. But I've crossed a few spreads there, and I've taken a little sell trade as the price broke. And that's where I've just made some nice money. Okay, so I crossed a few spreads there to get into this trade at lower prices. So I kind of broke a few rules on that one, but I liked what it was happening. I liked the sell-off in the transports. I liked this turn down here, and I just decided to cross the spreads for a BSG squeeze into this little bracket low here. And I've just had a very, very nice sell process there. And yep, stops at break even on that trade as well now, guys. So nice money, nice profits. Boom. Beautiful. Beautiful, right? Beautiful. Sexy. Sexy. Alrighty. What are we seeing in terms of